Hey, welcome to this week's Forex market preview. Hope everybody out there had a great week trading last week, and it's another bullish week for the euro. So in front of us, real quick, let me take this off. So in front of us, we're looking at chart Euro USD on a daily chart. And last week, if we drop the horizontal line across this previous high, you can see we're hanging out around, this support level. And the reason this is support is because price has broken through it, and now it's come back and it's been supported. Most of the time resistance becomes support, right? So we had resistance one when price came up here, comes back down, comes up there again, pulls back, and then shoots through that level. Once price shoots through this level, price comes back down, and this should act as support, okay? And price has started to move up even higher. Now, last week in the Forex market preview, I talked a little bit about, we had some MACD divergence, right? If you look at this high right here and the high over here, MACD was lower on the second high. And then if we scroll back even further, you can see where MACD topped out, right? MACD is right here, and that correlated to this price high right over here. Well, every time the euro keeps making new highs, MACD is failing to confirm that at this time. Doesn't mean that the market can't push higher. Now, an important thing we want to pay attention to is this on this daily chart, or I'm sorry, weekly chart. So let me draw some ellipses real quick. So what we have is we have a head and shoulders pattern. I talked about this quite a while ago, I don't know, probably 4 or 5 weeks ago. But what we have is we have a inverse head and shoulders pattern. Okay, so we have a shoulder, head, shoulder. Now let's go ahead and draw the neckline real quick. Drawing. Oops. There we go. And we'll draw it right like this. So we have the neckline basically right here. Okay, price broke through there, came back down, and now has retested that area and is trying to push higher. Now on a weekly chart, if you look at the MACD, right, MACD firmly shows that the bulls are in control. Now another thing that we need to do on this chart is pull for an ABC extension, right? A to B equals C to D. Here's the A, here's the B point, down here at this swing point is C. You can see the 100% level is roughly right around the 138 level. Now something else that's very interesting. I talk about this all the time, right? If we pull a fib from this swing high up here down to this swing low, price likes to retrace to 61.8. Well, that 61.8 matches up with this 100% retracement level, or 100% ABC extension level. Okay, so that gives us a nice little confluence channel, and we can go ahead and draw that in right here. Okay, now that does not mean that price is gonna, let me go ahead and remove these fibs. It does not mean that price is going to get there tomorrow or maybe even this week, but it definitely could. We have some constructive, price pattern on a weekly chart. So, overall, I do think the euro will most likely make it up to this 138 level at some point in time. Now, for me, I'm not a breakout trader, so I'm not going to be looking to buy these highs. Okay, if we get some type of pullback, then possibly, but I'm not real certain that we're going to get a pullback just yet. The market keeps wanting to push higher. All the euro crosses are definitely being bid up. Now let's go take a look at our pound dollar. So last week we talked about the swing point. Oops, let me remove this fib real quick. I talked about this swing point right over here. And I think price was right around here. I said, hey, we're going to be looking for price to come down and retest this swing point, roughly the 128, 24s, 25s, right up in that level. Well, we hung around there for a couple days. We made it down there Sunday, Monday. We hung around there for 2 days, and then we started to move lower. Now we have a doji type candle or a high wave candle forming right here. Now the bears are still in control looking at MACD. Momentum is definitely to the downside. But, this has went down pretty good. If you look at it, basically 161 all the way to a low of 157, you're roughly looking at, almost 400 pips straight down without any type of retracement just from this swing point. That's not even taking into consideration, the absolute high up in here. So, we could get some type of little retracement back up, before heading back down to those lower price target projections. And last week we talked about it a little bit, and I'll do it again real quick. So we can pull a fib from this swing point here up to here. We look for an external retracement of 127 is the first level. Then we'll scrunch the chart out. The next level will be the 161.8. After that, we'll be looking at the 200% level, which correlates, with this swing point down here. Okay, now I'm not saying that the pound's definitely going to make it all the way down to this 200% level. Okay, what I am saying though that it's a very high probability that we will come down here to this level at this 127.2, which is roughly the 156.70s or so. The only thing that we're going to want to see is the market going to bounce up before heading back down. Okay, as we attack the swing point over here, another key thing that you guys want to pay attention to, we had a swing point right here. If you draw a horizontal line across, right, look at MACD now, right? MACD is making new lows, which confirms, right, price is making new lows in relation to this prior swing. Okay, and MACD is confirming that. MACD is moving lower. Now, when we went back and let's look at this Euro chart real quick. Okay, the Euro is doing just the opposite, right? The Euro is moving higher, but it hasn't, MACD is not confirming that. So, the momentum on the Euro has been a little bit slower as far as on the Euro dollar. So, that's one thing you want to pay attention to. This tends to be, more bearish for the pound with MACD, down like this. Now, we talked about this in Thursday night's class a little bit. This MACD is not going to repair itself in 1 or 2 bars. It's going to take several bars before this, would start to firm up a little bit. And I'd really like to see price come down to the 127% external Fibonacci retracement level before doing so. Or if we get a little bounce up and come back down here and set up a divergence play with MACD, that would be just a gift if the markets can, give us a gift this coming up week. Like always, guys, I hope you guys enjoyed the video, and I look forward to any feedback. Thanks.